Hey, Bulls and Bears, back with another dose of economic reality. It is Thursday, March 16th, 2023. Things continue to get wilder and crazier and just more mind-boggling as we go. Today, the Dow Jones was up 371 points during a time when we have a questionable banking system, people questioning if the banking system is going to collapse, right? So when something like financial crisis is in the headlines or banking collapse is in the headlines, should we see a positive stock market? Does that instill confidence in people? Wild times, folks. Or do people know that now that basically the Fed or the government is going to be there to backstop all of the depositors now? And for those that have been paying attention, you know that the FDIC deposit coverage has completely changed. It used to be they would only cover up to 250,000. Now all of a sudden a crisis pops out of the shadows, and we've completely changed the FDIC methods that have been in place for decades. So wild times, and I've told everybody here that things can be done to continually expand this, to kick the can down the road, to prevent collapse. And if they have to change the laws, if they have to change the rules, if they have to come up with unprecedented quote rescue packages, that's what they will do. And that's why I've always said I'm erring on the side of inflation versus deflation, right? If all the banks fail, which they're all insolvent, if all the banks failed, we would see massive deflation. We would see a crash. Do they want to allow that to happen? I don't think so. No, they want to keep this going as long as possible. The people getting paid from this are making tons of money, so they're going to keep the game going as long as possible. Let's talk about what happened. First Republic Bank, they were injected or infused with 30 billion with a B, to stabilize their institution because they loaned out too much money and things turned sour. But get this, JP Morgan and Bank of America are banding together on a $30 billion rescue of this California bank, this First Republic Bank. So this is not very common at all. You see competing banks rescue another bank. It's typical where a bank would fail, get into trouble, it would be bought up by another bank. But helping keep a competitor bank operational or to keep it from collapsing is very unusual. And we see the powers that be out there, they're very adamant about avoiding the word bailout. They don't want people calling this a bailout. So is this just a backdoor way to keep First Republic Bank operational without actually doing a injection right to the bank from the Fed? It looks like it. Or maybe the Fed's just sending the money to Bank of America, JP Morgan, and therefore they're sending the money to keep First Republic operational. You know, we don't know. There could be things happening behind the scenes. And First Republic Bank could still get taken over. That's definitely something that's even likely to happen, in my opinion. Unprecedented times, folks. And we're going to see things happen this year that are going to make us scratch our heads and be like, why? Well, we know why. We know why. This is something that has to be propped up with massive changes to the structure of the financial system, right? All right, let's go on to some other news here. Mortgage rates dropping. The powers that be, again, we have the Fed out there buying up bonds. I don't think this is your average investor going to scoop up bonds. Typically, when there's a rush towards safety, though, the bond yields will drop because there's more demand for the protection or perceived protection of the bond. We have the 10-year bond now down to 3.53%. Remember, it was over 4% for a while. Actually, well above 4% for a while, 4.2, maybe 4.26, somewhere around there, many months ago. So we're seeing, as I predicted here, more ways to keep the house of cards propped up, keep the housing bubble inflated with lowering of mortgage rates. And now this flight to safety into bonds has the yield dropping as more demand for people looking for a safe place to hide from the banking collapse, which is not a banking collapse because now all the depositors are going to be rescued with new debt. That's all it is, new debt. The Fed, the central bank going out there issuing a bunch of new debt, adding it onto the pile of existing debt to bail out all the depositors. But it's pretty interesting because people were worried about bail-ins, meaning the depositors pay for when a bank fails. Now we're seeing just the opposite. The banks are failing, the banks so far anyway, or they're being taken over, into receivership, but the depositors are made whole. Wild times. Let's go on to some other news here. And I mean, you might know, but this is inflationary, by the way. Keeping the financial system propped up is inflationary. When institutions fail, when banks fail for doing reckless loans, for just being idiotic lending institutions, when banks fail, that's when you see falling prices, deflation, a falling cost of living. But the more banks there are, the more debt there's going to be, the more borrowing there's going to be, and therefore you're going to see a higher cost of living and higher prices. But the inflation we're seeing here in the United States is nothing compared to some parts of the world. Recent report here out of Bloomberg, Argentina, 100% inflation. 100%. So basically prices doubling year over year in Argentina. So we don't have it that bad here when we really look around and see what's going on around the world. And this is not even the worst country. This is just a recent uptick in inflation. So it made the headlines. But there's other countries that are even worse than prices doubling in 1 year. And this is a country where 40% of the people live in poverty. 40%. That's out of this report here from Bloomberg. And this is the direction that the United States is headed. I mean, we don't have enough manufacturing here. The world is de-dollarizing. So the dollars that we export to import goods and products, those dollars are being devalued. Now with this unprecedented action with the Fed, all this new issuance of debt to keep the financial system propped up, do you think that's going to be inflationary or deflationary? One, just all these new dollars flooding the system, that's inflationary by itself. But two, keeping failed financial institutions propped up, it's another thing that's going to add on top of the pile of the rising cost of living, unfortunately. Also, and I warned about this here on this channel as well, a lot of these banks that are becoming insolvent were heavily involved in cryptos. And I told you here that they're really going to go after cryptos, and it's not done. I think we're going to see other crypto exchanges go down. I think it's likely Coinbase could go down, Binance, some of these other big ones. And that's going to scare a lot of people out of crypto. You may even have your crypto off of the exchanges and maybe on a paper wallet or something like that. So maybe yours is safe. It won't go down with the ship, so to speak, as far as the brokers failing or getting taken over or getting shut down. But how much is it going to be worth if there's no online exchange to buy or sell the item? You know what I mean? So you may have it safe off the exchanges, but how much is it going to be worth? So that's something that's very questionable to me. So I'm not very heavy into that particular product right now at all. And I think there's a push to get people into what they're going to implement as the next currency. I say they, I'm talking about the powers that be, the Treasury, the Fed, etc., FDIC included. They're pushing people towards a digital currency. So they're going to come out with this crisis where the dollar is going to get completely obliterated. And they're going to say, oh, look what happened because of the banks. We had to issue all this debt. We had no choice. We had to rescue the depositors. And of course, the people that lost money are going to say, yeah, okay, that's great. People are going to be rescued. So it's going to be hard to argue against that because it actually helped people, mostly wealthy people, people that had more than $250,000. But that's going to be their argument. And they're going to say, oh, look what happened. We had to issue all this new debt to keep this thing propped up because of the crisis or to avoid a collapse. And now we need to find a better currency. And they're going to introduce the digital currency. See how this works? So bring on the crisis, introduce the savior, which is the digital currency. They're going to try to push everybody into this digital currency. I think there's going to be so much chaos in this country that I think we're going to see some upheaval, some social unrest, a lot of starvation, unfortunately. Things are going to start to look like third world country status here as we continue to go down the road here into this year 2023. And ultimately, after the disaster, I'm not sure how many of us will survive this, but after the disaster, we're going back to sound money. I truly believe we're going to have gold and silver implemented into the monetary system like we're seeing a lot of the world happening right now. The thing that's happening right now, though, a lot of the countries that are doing this are on the United States enemies list, right? We have Russia out there with China doing outside of the dollar trades, implementing gold into their trading. Other countries also involved. The BRICS nations plus more are being added. We've got Saudi Arabia's recent announcement that's no longer going to prop up Credit Suisse, or Credit Suisse as some call it. So things are happening where we're going to see things happen this year where you're going to be shaking your head, or your head's going to be spinning, because you're not going to believe what's going to go down this year. All right, now we were told that there's going to be tightening, rising interest rates, the Fed unwinding their balance sheet. But what do we see? About $2 trillion likely to be injected here in liquidity into the banking system. And this is per JP Morgan. The Fed's new BTFP facility is Stealth QE, injecting $2 trillion in liquidity. The higher the Fed hikes, the greater the probability of continued deposit runs. So they're going to keep on raising rates. If they do, there's going to be more deposit runs. The more the Fed's Stealth QE facility will be used to replenish the reserves among small banks. It's also going to be more flight to the too big to fail banks. So this is a power transfer. It is a transfer of market monopolization to the too big to fail banks as a place for people to go for perceived safety. Not good in my opinion, not good at all. Now, there's been a lot of people and financial gurus and financial analysts that have been speculating that the Fed will pivot, meaning instead of quantitative tightening, quantitative easing, and also instead of raising interest rates, dropping interest rates, right? So we haven't seen the dropping of interest rates yet. We're going to see what happens at the next meeting. Even if they pause the hikes, that is a sign that they're ready to pivot. But in actuality, they have pivoted. Instead of quantitative tightening, we see this new multi-trillion-dollar injection into the banking system, bailing out depositors. So this is a partial pivot. We're seeing a partial pivot. So those that said the Fed would not pivot, well, you're already wrong, because we're already seeing a partial pivot. How much longer is it going to be until we see the full pivot where they have to drop the Fed funds rate? Also, they're suppressing mortgage rates with this injection of liquidity into the bond market. Yeah, some of it's actual investors, but a lot of it's the money guys, behind this, right? So this is a pivot. It's happening right now before our very eyes, and the rules are being changed right before our very eyes. So trying to figure out the direction of this economy with this financial sector. It's going to be fun. It's going to be challenging, but it's going to be fun watching it. Grab your popcorn, fasten your seatbelts. We're going to wrap this up, everybody. Thank you very much to the following viewers here, supporters. David Amati, thank you very much for the super thanks, for the tip there. Maria Rivero, big love to all of you here. Maria, you're back again. Thank you. David Amati again. Wow, twice. And David Amati again 3 times. Wow. Thank you very, very much. Those are the latest. I appreciate you keeping this channel alive. Please let me know down below. Big love. Keep stacking. Bye for now. Peace. Big love. Big love.